There's never been a better time for the majority of people to be alive. And the future, although we're vulnerable and terrible things can always happen to us, it's hard to make a case that the future doesn't look comparatively positive. We're becoming extremely technologically sophisticated, and the world is changing at an incredibly rapid rate. And the only way we're going to be able to manage that in a positive way is if each of us, or as many of us as possible, are capable of making wise and careful and truthful decisions. And if we do that, then maybe things can continue to improve.
Jordan Peterson joins the Bitcoin conversation. For those that don't know who Jordan Peterson is, he is a professor of psychology and a clinical psychologist who became well known through his books and views on culture and politics. This week, I was pleasantly surprised to see Jordan Peterson has jumped into the Bitcoin wave and is actively contributing to its discussion. Jordan Peterson held a discussion with 4 Bitcoin experts and discussed Bitcoin from a perspective I hadn't seen before, speaking on inflation, how money is similar to consciousness, why fiat money is fundamentally flawed, and finally why Bitcoin is the best alternative. Seeing Jordan Peterson cross over into the Bitcoin world and look at the asset from a psychological perspective is fascinating. Here are some of the top highlights from the discussion he hosted, and make sure to stick around to the end of the video where we go over some recent on-chain Bitcoin data that suggests where its price is going in the short term. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind.
Do you guys have any faith in the idea that there is actually measurable inflation? Because is it reasonable? I don't understand inflation. There's a basket of goods and services that are calculated. The price of them is calculated every year. But what's in that basket of goods and services seems to me to be a relatively arbitrary choice. I mean, what makes you think that there has in fact been objectively reliable inflation, say, over the last 30 years, given, for example, that many manufactured goods and so forth have got dramatically cheaper? Now, I know housing in many places has skyrocketed, to a tremendous degree, but do you really feel that the currency has become corrupted, and that you can, and what do you rely on to make that case? What data do you rely on?
I could jump in here, I think. I would say unquestionably, debasement of the currency, it is an arbitrary harvesting of the economic surplus a productive free market economy is creating. So as an economy gets more efficient, it generates more wealth that's passed back into to market actors in the form of declining prices. So we're getting smarter at making chairs, smarter at providing services, electronics, all these things. But by printing money, you're basically stealing claims on that economic surplus and doling it out arbitrarily. So we could say another way to think about this is that the free market itself, as you've described, Jordan, it's a distributed computing system. So we all have our 120 bits per second conscious attention span. You multiply that out by 8 billion market participants. That is the cognitive power of the free market.
Right. I want to emphasize that because it's such an important point, and it could easily be skipped over, because there are people who admire the ideas of central planning, and you think, well, maybe there's 40 people doing your central planning, and so maybe they're the smartest people in the world and they're doing your central planning, but they have to calculate on the fly a virtually infinite amount of information if they don't have free market prices at their disposal. They have to calculate what metal is worth, what nails are worth, what labor is worth, what rubber is worth, what cleanup is worth, what nursing is worth, et cetera, and they have to do all those comparisons, and they have to do those computations, and there's actually no way even technically of doing that, and the alternative is to distribute that calculation across a virtually infinite number of actors, or actors in the billions at least, and let every single person act as a computational device and sum all that. And that's what the free market does. It's not even in principle replaceable by a logical cognitive mechanism. I can't see how it is.
That's exactly right. It's not even possible that a centralized bureaucracy, a centralized computing model can compete with a distributed computing model of the free market. We could actually, in fact, say that the free market is a pure economic democracy. People are voting by buying and selling, and whatever price is generated on any given asset, that's effectively the truth of what it trades at. any intervention on that, any intervention, any regulation, any pricing czar as they had in the USSR, you move along that spectrum towards an economic tyranny, where we have now the arbitrary wishes of a few overriding what the free market democracy is selecting.
My understanding was that the 2008 crisis was fundamentally produced by a technological revolution. And the technological revolution was something like the realization that you could take investments of a certain risk level, mortgages, let's say, substandard mortgages, and by bundling them together in huge tranches, in huge groups, you could quantify the risk. And as a consequence of quantifying the risk, you could make the group of investments more valuable than they would be as the sum of the individual investments, which I thought was a brilliant innovation. And so now the companies, banks, traded these huge tranches of subprime mortgages because they could quantify the risk. And that means that could be accounted for financially. And so the risk was ameliorated. And the flaw was, well, no one realized that doing so en masse would increase the probability that housing prices would become correlated across time, across huge geographical regions, for example, across the entire United States. And so the housing market could collapse all at once. But you could make the case that was actually a flaw in the free market computing prowess, because a technological innovation came along, warped the entire system, and then what had to happen was the political system had to rescue it. And so I watched that and I thought, well, was the political system embedded in the economic system, which is, I think, the argument you guys are fundamentally making, or is the economic system embedded in the political system? And what's wrong with my analysis of what happened in 2008? Wasn't it the case that the market was rescued by the political actors? Is that incorrect?
It's the arsonist putting out the fire. Sorry, go ahead, Rob.
Yeah. No, I could start and you guys feel free to jump in. So I would first encourage you to look into what's called the Eurodollar system, which is essentially this. We control the pyramid scheme in the US, the domestic dollar supply, but there's this offshore derivative system where everyone's trying to peg the dollars that the central bank doesn't control. That's actually been considered to be at the root of the 2008 crisis. And then this was kind of a cover story. But if we just get back to error, so we could say risk is error, right? So there was this embedded risk that we thought we had calculated and contained. But what was actually happening is, because we have centrally planned money, it's pushing hidden risk into the economy, right? Because the free market distributed intelligence being defined as error correction, it's mitigated by the central planning of money. So these hidden risks accumulate, and that's why we've had increased volatility since 1971. We have these huge economic booms. We print a bunch of money. Inflation runs hot, but so do assets. Everyone thinks they're doing really well. And then we have these catastrophic retracements back to economic reality. And actually,
that's because incremental reaction to risk is not being implemented. That's what you'd expect, right?
We're diverging perceptions from reality, effectively. So even the correction in March 2020, that was the sharpest liquidity collapse in the history of markets. It was faster than 1929. So we would expect, as more fiat currency, which is artificial liquidity, is pumped into the system, it's further distorting this economic perceptual faculty and creates even more volatile boom and bust. This is the Austrian business cycle theory in a nutshell. And the only way to resolve this is to let the free market clear errors. That's what it does. That's what consciousness does too, by the way. So you can think of the free market as our interconnected consciousnesses mediated by the price signal. When you disturb the price signal, our consciousnesses become divided and we have increased errors and blow-ups.
Well, that's why I suggest to people that they don't engage in deception, because they distort the value signals and they warp their own consciousness. It's a very dangerous thing to do.
That's right.
Because you only use deception
That's exactly what money does. That's exactly what fiat money does.
Fiat currency is a living lie. That's it in a nutshell.
Okay, so let's talk practically for a bit. So, and then we'll return to the central discussion. I mean, Elon Musk has recently objected to Bitcoin on the basis of, and maybe is this a flaw? Bitcoin becomes more and more expensive to produce as we proceed through time. And the consequence of that is that we do, in fact, use up more energy, or at least that's in one form, which is computational energy. Maybe we gain that back and, efficiencies within the market itself. You could argue that. But what do you think about Musk's recent decision with regard to Bitcoin?
I would love to jump in on that because I have written about that extensively. And I think what you said is exactly right, that Bitcoin is a map of value, so to speak. And what's so interesting about Bitcoin is that Bitcoin is both the map and the territory. And as I've said before, in the informational realm, we cannot link, usually, like we cannot link the map to the territory. You cannot do it. Like if you have something in the real world, writing something down about it, you will always have to trust the person that wrote it down. And what's so ingenious in the world of Bitcoin is Bitcoin uses the only thing you can do with information, which is to transform it, to anchor it to the real world. So this is what proof of work does. That's what the energy expenditure is for. And the energy is used for various things. So it's used to secure the system. It's used to distribute new coins. It's used to make sure that the history becomes incorruptible. So it also secures the past. So it does a couple of things. It also makes sure, like, it even decentralizes time itself, which sounds kind of weird, but it's very hard to keep a decentralized system synchronous because of relativity and other effects. So you would have, if you wouldn't have something like physical proof of work, you would need to trust a central authority in terms of time, because the order of things, like the order of transactions, needs an absolute order of time. And all these things combined are solved by the proof of work system that Satoshi Nakamoto introduced. And so the energy expenditure, the basic question becomes, once you realize that, the basic question becomes, is it worth it? And society in general,
that's the question.
Society in general asks this question about all kinds of things, like, are cars worth it? Are smartphones worth it? Is the internet worth it? All these things, they take up a lot of energy. And Bitcoiners argue that Bitcoin is definitely worth it for the sound money aspect alone.
Musk is determining by fiat that it isn't.
Well,
instead of letting the market decide.
It's very hard to decipher what Musk meant with his recent comments, because Tesla is still holding a lot of Bitcoin on their balance sheet. I think it's about $2 billion worth in Bitcoin, and they don't intend to sell any. And so, it's a political game to so
let me ask you this. If you guys are right, tell me if I'm leaping somewhere I shouldn't be here, but what should happen is that whatever energy is expended in the production of Bitcoin and the maintenance of the system should be more than recouped by the increased efficiency of every system that used Bitcoin as a transactional device. And so there'll be a net energy gain, not a net energy loss, if you calculated it across the entire system. And so it's a mistake just to look at the cost of generating Bitcoin in the absence of considering the efficiencies that Bitcoin would produce.
And the same is true for gold as well. It takes a lot of energy to extract gold from the ground. And historically, society in general answered this question in the affirmative. Yes, it's way worth it. Like, it's worth to dig this up. And
right, but there were limits, right? Because once the ore becomes insufficiently rich, at some point you stop refining it. So there's a limit. But according to your logic, at least, the limit on the energy expenditure that Bitcoin produces should be produced by the market response to Bitcoin, not by some fiat judgment about whether or not it's ecologically sustainable, because that's just a guess. And the best indicator that we have for ecological stability is going to be cumulative free market decisions, even though those aren't necessarily very good. They're better than anything else we could possibly generate rationally.
And just to clarify one point, and then I'll let Robert dig into this. Bitcoin doesn't take energy because the production of Bitcoin takes energy. The production of Bitcoin, it's an emission schedule, so it's constant. We know when the last Bitcoin will be mined. It's going to be around in 2140, and it doesn't matter how much energy you expend. It won't go quicker. It won't go slower. So if you dig harder for it, it will be harder to find, and if you stop digging for it, it will get easier to find. So that's the genius invention of the difficulty adjustment. So there is no one-to-one link of Bitcoin production and energy expended. The energy is used for different things.
So there's Jordan Peterson exploring the problems with inflation, the traditional finance system, fiat money, and why Bitcoin is the answer. Fascinating to see him bring a psychologist's perspective to the conversation, and that he is now contributing to the Bitcoin movement. Now, for some recent on-chain Bitcoin data that suggests where the price is likely to go in the short term. First up, from Will Clement, we have the illiquid supply of Bitcoin. As you can see, throughout the history of Bitcoin, a larger percentage of supply continued to become liquid. However, in March of 2020, this started to change as supply started getting stored in cold wallets and becoming illiquid. As of right now, 76.8% of the supply of Bitcoin is held by strong hands, and this rate is only increasing. Secondly, out from Willy Woo, we have the growth of users on the Bitcoin network. Willy Woo points out that right now, users on the Bitcoin network is growing at its fastest rate ever, with 1.2 million users added in the last 30 days. Absolutely insane growth. From all the on-chain data I am seeing coming out, it looks, due to the falling supply of liquid Bitcoin combined with the increased demand in the way of increased users on the network, that the Bitcoin price is heading much higher. Anyway guys, hope today's video provided you with some value. I'll see you all in the next video, and as always, have a great day.